Well, the QQQ ETF crashing through a key level today before recovering some of the losses. But the chart master says beware of this bounce. We want to get Carter Worth's take on all of this. Carter Worth of Worth Charting. Carter, you sent out a note, I believe it was 10:21 a.m., not to the penny. And so you're highlighting the trend break that the Nasdaq 100 was making. What happened in the end with this massive turnaround?
Right. So for the first time, before we look at the charts, for the first time in basically 18 months, the QQQ, while it recovered intraday, broke a key trend line. And so the question is the recovery the primary data point, or is it the breach of the line and the recovery is the secondary data point? That's my hunch, that the breach is the more important and the good recovery into the close less important. Let's look at three charts. So this is the QQQ with the 150-day moving average. Think of it as an automated trend line. It has come down to the penny repeatedly, and today, for the first time in 18 months, it undercut the line. It closed above it, but it's the first time in a year and a half where we breached that line. Look at the next chart. It's identical. This is the actual trend line. The point of a moving average is you're automating the process of drawing lines. You could stay up all night drawing lines. I had to do that when I started in 1989, but computers do it for us now. The moving average should track the actual trend line. Not once has the QQQ touched the 200-day. It really doesn't have the hit rate that the 150. So here's the question. Final chart. This is looking at the QQQ. It's a ratio chart. So you're not looking at a security itself. You're looking at the QQQ's relative performance, the index, to the S&P 500. And what is so fascinating is that we, in the past 18 months, have gotten back to the dot-com peak. And now we are churning there. The bear would say you're putting in a double top. What I think we're doing is actually just consolidating. And ultimately, the question is, looking out over 36 months, is the S&P a better bet, SPY or QQQ? Ultimately, I want to stick with growth. I want to stick with innovation. And that's where the QQQ comes into play.
Wow. Carter, thank you. Carter Braxton Worth of Worth Charting. Is that where you want to be, Dan, ultimately?
Yeah, I think 100%. I think the big question here is that what sort of excess can be worked off in the near term? We know that some of the smaller market cap components of the Nasdaq 100, the QQQ, have been down 30%, 40%, 50%. Some, I mean, Zoom at its lows today was down like nearly 70%. This was a massive market story. This was a company with over $100 billion market cap at its highs. So I think it's really important to put some different things in context. So if we want to work off some excess, the next place it has to happen are these largest components in the Nasdaq 100. And it's worth noting that, you know, the Nasdaq had a 12.5% peak to trough decline last Q1 2021 when rates were going higher here, and then every subsequent sell-off that it had an 8.5%, then a 7.5%, then it had like a 6.5%. So it would make sense if we were going to go back towards the lows from, let's say, late September, early October, that would be about a 13% peak to trough decline. If that were to happen, that means you have outsized moves from Apple, from Microsoft, from Amazon, from Google, and maybe NVIDIA and Tesla, and throw those in there. And so that would be a very healthy setup for all of those strategists who have year-end targets somewhere above 5,000, maybe as high as 5,500.
If the chairwoman were here, and by the way, she's having camera difficulties, we didn't forget about her. She had made the comparison last week, I believe, to the dot-com bubble and the way the sell-off has been feeling in technology these days. And Tim, I'm wondering, you know, where you think, obviously there's going to be the rubble, there's going to be the pets.com out there, those types of stocks that may never really fully recover back to its heyday. But there will be others like the Amazon.coms that emerge, the Microsofts, et cetera, that are stronger, as Dan had mentioned, if there's excess worked off.
Yeah, look, I think a lot of these internet stocks and ones that are also related to security and software. I mean, look, Palantir is a real company, and you know, I actually think Zillow is a real company, and we've talked about Zoom, and I just think this is absolutely 2.0. If you look at and .com crash 2.0, if you look at, you could put together a basket of stocks that were some of the high flyers that are down anywhere from 65 to 80% off their 52-week highs, and it's a function of, first of all, those valuations never made sense. It's also a function of where we've seen rotation in the market that's been going on, not for 6 weeks, but more likely 6 months. In fact, really, most of this stuff peaked right around the time we got the first kind of market, Fed fear, and this started to happen in April and May. So I do think that the higher rate environment is something that's not great for these stocks, but it's setting up for a great opportunity. And I think a lot of investors need to understand, first of all, which are the companies that are real, that are secular stories, that the trend is anything is as good or better now. And I think that's really how you have to play it. But multiples are important at some point, and this is a market environment right now where those high multiples are punished.
Yeah. Guy, are there high multiple stocks right now where you would say, you know what, that looks interesting, even here, even with the volatility ahead?
Yeah, two. NVIDIA, I think, had a nice reversal today, but it's Amazon, and kudos to Dan Nathan. And this is sort of crawling through the wreckage for you Dave Edmonds fans. And you're crawling through it, and you find Amazon today, which traded down to the May low, traded down to the August low, bounced off this 3150 or so level. Dan had been saying you're looking for an opportunity around 3,200. I think you got it today. So there are names that have been trading. We've talked about them seemingly for the last month and a half, 2 months, that have very quietly been trading lower. You might have gotten your opportunity in both those names today.